Hello friends, welcome to Advice Show. So today we are going to talk about why our Indian markets are falling. Now there's a lot of speculation as to why Indian markets are falling, but the major news, the major cause of concern is China. As you can see, there's a news everywhere that Chinese markets are falling. They have fallen almost 15% in the last 3 days. Tradings have been halted. These do not have a significant impact on our Indian markets. One thing I would like to point out is Indian exposure to China is actually 5% of the trades. So I don't see much impact happening because of the Chinese fall. I in fact believe that Indian markets have still quite some fundamental strengths. And one of the reasons, or in fact two of the reasons why Indian markets is expected to outperform in the year 2016 is that, the Fifth Pay Commission data is out recently, and you wouldn't even believe that, fresh money of around 1 lakh crore rupees is expected to be pumped in the markets. So ideally, when an average family, a middle class family, gets say additional 5,000 rupees, for a month, they would go out, spend for shopping, for clothes, for movies, probably go on a family vacation, something of that sort. So this leads to increase in demand, and hence it leads to better discretionary spends, which has a positive impact on the bottom line of various companies. So imagine if 1 lakh crore rupees is being pumped in the markets, what positives can happen. The second reason why Indian market will grow in the year 2016 is that the rate cuts done by RBI have not been passed on to the end user. Approx 1.25% interest rates were cut by RBI in the year 2015, and banks had initially retained those to clean their own balance sheets. So these have now been started, being passed on from banks to the consumers, and in the next coming years you can see companies who had high borrowing costs, they would start making good profits. And also capital expenditure, capex cycle, which was stuck in a rut because of high borrowing costs, now reviving in the years to come. So this is why I believe that on basis of these two reasons, our markets are expected to outperform in the coming years. In the short term, markets can still go down because of the speculation related to Chinese data. However, we feel that from a long-term perspective, say for probably 2 to 3 years, one could easily start investing in the markets on a monthly basis. And in the next video, we'll be talking about some of the best stocks that one could invest in. Thank you.